What is going on, everyone? This is Andrew O'Connell with Pristine Capital. I am also the director of research at Leduc Trading, coming at you with the first market recap video of 2021. Happy New Year, everyone. It is January 4th. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today, we're going to be talking about the price action, the headline indices, the volatility spike we saw today. We're going to go under the hood and check out the sectors and style factors. There is a lot to unpack there, some of the trades I took, and then we'll wrap up with some options order flow. But before we jump in, quick risk disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but not least, do not YOLO your entire account into any one of my trades. So let's jump right in. I'm not sure if I talked to you guys about this, but I am participating in the 2021 Investing Championship. So today marks my first day out of the year. I'm going to be tracking my results throughout the year and just seeing, if my goal is to make the top 10 this year. So we'll see what happens with that. Just like a nice, goal for the future to aspire to. And to just kind of keep me honest with my investing and trading and just make sure I'm giving it 100% as always. So today we had, a bit of a red day. We had the S&P 500 down 1.36%. We had the NASDAQ QQQ down 1.41%. And then we had the IWM small caps down 1.31%, followed by the Dow Jones down 1.13%. So I just find it really funny. Everyone has been like super bulled up, throughout the end of the year, which makes perfect sense. We've been on a really nice run. But I was seeing everyone like so happy about 2020 results. Like, oh my gosh, this was the best year. Like 2021 is going to be like just as good. It's going to be an awesome year. Like everyone was so like, stoked going into this year that it was just going to be awesome. And sure enough, like literally on the first day of the year, we just get a pretty vicious sell-off. We tear through the entire monthly value area. And it was a bit of like a, scary day or whatever. And then sure enough, everybody gets like super negative on the markets and like, oh my gosh, it's actually going to be the end of the world. So we'll have to see what happens. But I'm just taking it day by day. So we shall see. But our S&P 500, you can see we did have a big red candle. And we are, well off the highs today. Our high of the day was 37.73 for the S&P 500. And you can see, I think what's interesting, like we have a new monthly value area. You can see it's a very tight monthly value area because last month's price action was, really tight in terms of the range of action that we saw. So it's not going to take much to have us tear through this value area and actually start trending lower, if that's what the market wants to actually do. Like you can see today, we just sliced right through. So we cut through the 5-day exponential moving average. We cut through the top of the value area. We sliced below the 20-day simple moving average. And we almost tagged the monthly value area low. And that was in, like the first 2 hours of trading for the year. So it just goes to show that in markets, things can change on a dime. You always have to be ready to adjust your mindset. And I think the people that struggle in the markets are people that, like whatever worked, say like last month or last year, they will just continue to do that and do that and do that. And then they blow themselves up and it's like, what happened? And it's like, well, the market conditions changed. So you have to just make sure like you're adapting with the market conditions. What I did find, I guess sort of comforting, whatever you want to call it, is, we ended up auctioning up off the lows and, we regained the monthly point of control, which is a good sign. And then we also regained the 20-day simple moving average. So this is definitely, it's certainly not the most bullish candle ever, 100% not. But it wasn't, like a financial disaster or something like that. So we'll have to see what happens. But yeah, definitely a bit of a shake up on the first day of trading. We had the Qs. Yeah, very similar story here. And you can see, this thing is just painting. Yeah, very similar with the Qs. We didn't quite move as low through the monthly value area, but we did tag the point of control. I'm actually going to remove this alert. Yeah, you can see the Qs are showing relative strength compared to the S&P 500, but at the end of the day, in a pretty similar spot. Then you can see IWM. IWM was nosediving in the first couple hours of the day also. And you can see the IWM actually closed below the 20-day simple moving average. So that is pretty noteworthy, where the small caps have been on a glorious ride throughout the last couple of months of 2020. I'm actually going to zoom out to the weekly chart here. And if you take a look at this, like these small caps, they're flying pretty high right now. Like the prior high was around like 172 pre-COVID. You can see they're so much farther beyond that. And these companies are really the ones that their businesses were significantly impaired, reduced earnings and cash flows, the whole 9 yards. So this is the sort of thing where, like, say if like the best company in the world is getting to like a kind of crazy valuation, it's like, okay, well, that's the best company in the world, so it makes sense that that valuation is going to be really high. With something like small caps, getting to like ridiculous price levels, like these small caps are pretty, they're not great businesses, and a lot of them are impaired. So there's not as much like, valuation support. So I'll be watching, these small caps just to see if they continue to underperform. Because I would imagine most people that are in these stocks, I'd imagine they're sort of in them for like a rotational trade. I don't think many people are like, yeah, I'm super bullish on these stocks that got like ripped apart through COVID. But we'll have to see. So it's definitely noteworthy that the IWM is showing a bit of relative weakness. And then the Dow Jones also completely ripped through the monthly value area. And look, it actually poked below the monthly value area low. Yeah, this one closed well off the lows as well. So dip buyers definitely did, come in to save the day today. But you can see on almost all these indices, pretty high volume days. And let's take a look under the hood. So the big theme, for this week is going to be the Georgia, runoff elections. And the reason why it's significant is because, there's the potential for a blue sweep, where the Democrats control the executive branch, they control the House, and they also control the Senate. And under that scenario, I would imagine it would be much easier for them to accomplish a lot of their primary goals, such as, potentially increasing the corporate tax rate, potentially legalizing cannabis, potentially moving forward with a lot of clean energy initiatives, potentially printing a lot of money. So, depending on how this goes, say if the Republicans take control of the Senate or, keep control of the Senate, then a lot of those things, it'll be tougher to pass those. So it is going to be impactful, to see how that all shakes out. And you can see the price action for today is giving us some clues. So if we look at these sectors, I can see that solar energy, was showing relative strength in a really weak tape of 2.14%. Gold miners, which if you've been watching my videos, we've been laughing almost every day for the past like couple months. Gold miners are always in the bottom slot, and now they're moving, right up to the top. So, who knows? Maybe people are foreseeing increased money printing, MMT, that sort of thing, and gold prices are being affected, and those gold miners as well. And then the cannabis stocks, you can see they finished up 4%. So to me, this price action I'm seeing is showing, the market is pricing in a Democratic sweep. So while today was, super scary in terms of like, oh my gosh, the market's going to fall off a cliff, I would definitely watch those areas of the market. And like for me personally, I want to make sure that I have some exposure to those areas, into 2021. And then some of our, underperforming areas of the market today, you can see the utilities were down 2.52%. We had real estate down 3.4%. you can see we have the transports down, 2.04% as well. So there was a big disparity between, the winners and the losers today, which I thought was super interesting. Because when things, I'm going off on a tangent here, but when things get like really risk off, pretty much everything just sells off. This seems like, almost like more rotational, which I just thought was interesting. And then in terms of our style factors, you can see here international momentum was up 1.09% and international value. So that was another thing that I noticed where I track a lot of these, country ETFs. And I noticed what was weird was, the US market was selling off significantly. But when I was looking at all these other, country ETFs, most of those were up on the day. So this was very strange price action. Or to me, like, was it risk off? Yeah, I guess so. But it was, risk on in certain areas, risk on in certain countries, but really risk off, in the United States and a lot of, areas within that market. So you can see our laggards, we had high beta stocks down 1.44%. We had min vol down pretty heavily, high div, low vol, and then quality as well. So really, nuanced action we're seeing today. And then for some of my trades, let me just pull right here. Yeah, so I actually took a couple of stops today. And I also, I didn't do a market recap video on New Year's Eve, like that, the last day of the year. But I also took some stops, on that day as well. And really what I'm noticing, CPRI was one for instance. Let me pull this one up. CPRI is one that I've had a core position for a while. But I did recently add some additional shares to my position, and I stopped out of that ad. And this is, I really like this company for the long term, but this one you can see, for a long time it had been respecting that 20-day simple moving average, and I saw today, just huge red candle, and we just ripped right through it. And I don't really think it's the end of the world for this stock. Like you can see, it's not coming on incredible volume. And this one's actually being moved to the mid-cap index rather than the small-cap index. So like I said, I don't think it's the end of the world, super bearish. But I just want to make sure that if the market, gets weak, I just want to take my stop. So I took a 3 or 4% loss on this name today. I purchased in on this candle right here towards the lows. So that's something where I just feel super comfortable taking that loss. And I just want to get it off the book. That way, when another opportunity comes, I can just seize that opportunity. Same thing with Salesforce. This was one that I put on. I would say this wasn't exactly an A+ setup. But it was one that I thought could be a good trade. So I put on CRM, somewhere around here. And I had seen some bullish call flow go up. And I just noticed okay, CRM had a pretty big sell-off here. But there wasn't really much willingness to auction it, much lower than this level here. I actually took my stop today. Actually, it was probably towards the low of the day, to be honest. And then you can see this thing auctioned up. And it held the value area low. So CRM is one that I will probably watch to see if it gets above this monthly point of control. And I have no problem, jumping right back into this trade. But this is another one I took off for about a 5% loss today. So that is one where, I'll keep watching it. We'll see what happens. But, it's one of those things where the market has been, so awesome for the past couple of months. There's been a lot of opportunities to make really good money. So if things start to, change character a bit, I have no problem just taking those stops, moving on and using the capital, for other trades that are really working. And I just want to make sure I'm being prudent with that. So we'll see. CRM is one I'm going to keep on the back burner. One that worked out really well today that sort of saved me personally was this silver miner that I put on last week, PAAS. So this one is Pan American Silver Corp. And the metals are something I've been talking about for the past couple of weeks, because you can see if we zoom out, this chart looks pretty similar to, the gold chart. So I'll just go to the gold chart. So you can see gold had a really nice move over the summer, and then it really just trailed off for the rest of the summer. Just consolidating those gains and, trending a little bit lower, to be honest. And last month, you could see gold, the downtrend kind of stopped and we started moving sideways. Then if you look here at this monthly value area, we got above the point of control. And you can see even when we dipped below it, buyers came back in and auctioned it up. And it just looked like this was changing character. So I wanted to get involved. And so I purchased that one a couple days ago. This one, Pan American Silver. And this one I purchased the April calls, the 35 strike. And I purchased on this break of the monthly value area high. So I bought in right here. Was sitting on like small losses the last trading day. And then today this one really took off. So this one, was an awesome trade to balance out, some of those losses that I took and trades that I got kicked out of. So this one, we'll see where it goes, but I would definitely say the silver stocks and the gold stocks, those are definitely on people's radar now. And that's sort of what I was pointing out, where over here, it was like not as much on the radar because it's like, oh, maybe this is just, like a, like a move up in a bearish trend, like just a dead cat bounce sort of thing. Now the way this looks, it's like, okay, now we're actually super close to the prior all-time high. So I really like these miners moving forward. I think especially if we get that democratic sweep, I could see gold and silver doing well. And you can see, look at the volume on this bar today. Highest volume, for a couple of months. This is a pretty significant increase in volume. So I do like this Pan American Silver. I'm going to move out to the weekly chart. It's like the losers, I want to kick those out for really small losses if I can. But something like Pan American Silver that's working, my call options, this one I just want to ride it. So you can see, look at this. We have a new yearly value area. And you can see we're closed firmly above that. This is the weekly chart. And this one, who knows? We'll have to see where it goes. I could certainly see it getting to this like 45 level. I'm actually going to set an alert there. Create alert. At or above 45. And then another one. Oh, I added this one, Curie. And Curie, this is a really interesting play. Curiosity Stream. This is more of a long-term investment. And these guys are in like the streaming business, like somewhat similar to like a Roku or a Netflix, that sort of business. And these guys are just getting their start. There's some really impressive growth rates for the future. And this one is recommended by, a super smart analyst. So I just figured, what, I'll take a small position with the intention of just holding this one, holding on for dear life and seeing where it goes. This is definitely like a high risk, high reward type of investment. And this thing gapped up like 20% on that recommendation. And I was like, you know what? If this turns out to be a good investment, like, is it really going to matter if I got in at like $17 versus like 15 or whatever? So I bought it, somewhere, maybe at like 1680. But this one, we'll just see where that one goes. And then another one that I added today was IPOE. This is one of Chamath's SPACs. And at this point, I'm in like IPOC, iPod, IPOF. Now I'm in IPOE. I'm in iPod as well. I am bullish on Chamath. And I'm like, you know what? This guy, he's a great capital allocator. He's got a great reputation. And, if you look at the price action, his prior SPACs have all done really well. So especially when the market is looking kind of turbulent, this SPAC has downside to about $10 a share. But who knows where the upside will be if he picks a good company to invest in. So IPOE is one I'm putting on, again, more so for like a long-term focus. Because if he announces his acquisition target and it's a really, awesome company, this thing I could see it going to like $15 or going to, who knows, maybe $20. I don't really know. But at that point, if and when that happened in the future, I would certainly look back and say, why didn't I just allocate a little bit to it before they announced the acquisition target? So this is really like regret minimization as an investor for me, where I want to just, position in here. Maybe one of them is a success, and I think if one of them is a smash, it'll pay for any of the others that are duds. So that's sort of where my mindset is with that. But that about does it, for some of my trades and things of that nature. Let's take a quick look at the options order flow. I don't want to make this video like a 30-minute video here. So let's see. I'm going to see if I can pull up my Cheddarflow. There was a lot of options activity today. But I'm definitely super pumped for this new year of trading. Last year was definitely a big learning experience in many ways. And I'm happy with my results, but I definitely feel like last year was sort of like an easy year to do well. So I want to just keep working my system and see, like, who knows, maybe if this year is not so great, just see how I do. So let's see. Yeah, we're filtering for our orders $1 million and up, as we always do. Because as I always say, these large institutions are really the ones that are moving the market. You can see here, they were coming in for GLD. So this is definitely encouraging for gold bulls. You can see this person bought calls for November 19th of 2021. Somebody else bought calls for March. These are several $1 million. And I noticed this is what I get from observing this call flow. For me personally, I have to listen to what the call flow is telling me, especially when I have context around the asset. Because I started seeing these GDX orders, silver miner orders, gold orders come in like a couple of weeks ago, really before this space started moving. And now I would say those were like the leading indicators, like the leading orders. Now these are more like coincident. Like now it's obvious to everyone in the markets that gold and silver, like the precious metals, just in general, have a lot of momentum. So now this is more so like people trying to capture the momentum, more like coincidence stuff. You can see Apple, some big call buyers coming in. I still have my March Apple calls on the books. They have a 132 strike. So you can see Apple. Let's take a look at what that one did. Yeah, and Apple, this to me still looks pretty good. Like I bought my calls on this green candle. You can see we're getting a bit of a pullback, but we closed above that 20-day simple moving average. So I still like the look of Apple. And that's why I bought the March calls, because I was like, what happens if I'm buying like the local high, which in hindsight is exactly what I did. But by buying the March calls, I gave myself some time. So we'll have to see, what Apple does. But I would definitely say, for everyone that's saying the market is like incredibly frothy and there's so much speculation, I would definitely say there's pockets where there are. But now we've gotten a pullback in a lot of different, asset types. So at this point, like if you're one of those people that's like, man, I would love to get in, but I just need a pullback. Like there's been a lot of assets that have been pulling back. Oh yeah, another one that I added today, Enphase. This is one I added a position in just because, like I was telling you guys earlier, I want to get involved with that solar theme. And like the clean energy. I want to make sure that I have, exposure there on the books for this year. So I added some Enphase, and you can see this one is consolidating, correcting in time. It's not too extended from the 20-day simple moving average. This one, it's in a beautiful trend. It's been leading. So I added, some common shares in this one today. It's like a side tangent. Let's see. Let's see what else we got. CSX, these rails. This is definitely pretty interesting to me because, like I noticed last week, when the growth stocks started taking a hit, I sort of realized like I might have a little bit too much on in this one specific style factor. So there were a couple days when the market, was pretty much like flat, or there was even like a day or two when the market was up. My portfolio was down because I was in like so much of the same factor exposure. So something like CSX, like the rails, might actually be something I'm interested in adding because it's a different style factor than a lot of my portfolio. It's more like a reopening theme. And you can see CSX closed actually below the 50-day simple moving average, so that's not really that bullish. Well, let me see what these people bought. So they bought the May calls for 2021. Yeah, more May. And this person bought the 40 strike. Yeah, it's probably the same player. Let me see in CSX. What's it trading at? It's trading at 87. So that's definitely, stock replacement at play. But pretty interesting. Let me see. This video is going to be way too long. This is just me going stream of consciousness. Okay, so we're still well above the monthly value area for CSX. So, yeah, pretty interesting. Then we'll look at like one more because I don't want to hold you guys for too long. And by the way, I am going to be posting my affiliate link for Cheddarflow in the description to this video. So feel free to click that if you're interested in a 7-day free trial. So let's see, Netflix. Yeah, we got some orders for Amazon. So there were just so many orders today. Tesla, of course. There's always Tesla orders. Tesla was showing relative strength today also. Yeah, it closed well off the highs, but yeah, Tesla is still moving. And then FUBO. This is just like, I saw one FUBO order in there, maybe like a couple. But this is brutal. So FUBO, I remember when people were like, getting into FUBO like $10 a share. And I was like, oh man, this just seems like way too speculative. I normally don't like playing these low dollar stocks all that much unless I really like understand the company. Like in rare cases, like CPRI, that's what I did today. But yeah, I pretty much missed FUBO. And then on this consolidation right here, I was seriously considering, adding a position in FUBO. Then it tagged the 20-day. And it started taking off, and I was like, oh man, like I just missed it again. I bought some shares of Jumia at this point, so I was like, I'm just going to let it go. And this one doubled in about like a week and a half. And then now look, like the parabola broke, and this thing is just tearing through levels, man. Like I've seen people on, financial Twitter that on this pullback, they were like, oh my gosh, FUBO is at 61. Now it's at 52. Oh my gosh, like what a deal. That's so cheap. Then this day, like at 44, what a deal. Like I'm getting in. Same thing down here. Like that's why with these momentum stocks, especially when they're trading at ridiculous valuations, just because a stock goes down doesn't mean it's cheap. Especially when it's rallying on like the future hopes of its business. Like you just never know. And this sell-off is coming on super high volume. This thing, almost everybody that's in it, for the past month or so is underwater. So rather than me being like, I'm going to dip buy FUBO, I like the business model for Curiosity Stream. So I was like, you know what, I'm going with this one instead of, trying to attack FUBO. QS is another one that I was also interested in going long, literally at the top. I was considering going long at 132 and like, how stupid would that have been if I did? But this one, I was like, you know what? I'll wait to see if it pulls back, more so like with the parameters of my trading system. And right over here, I was like, if it starts turning bullish, I'll add a position. I'm so glad I didn't. This thing just has been horrible. It's down 40%. And when I did some more research, I realized that this company doesn't even have revenue yet. So for all I know, this thing could turn out to be an amazing investment. But when something has like no revenue, you're sort of like at the mercy of some of these big institutions that it's like, oh my gosh, I hope they don't decide to sell, because if you're in it just because the stock price is going up, then once the stock price starts going down, you no longer have a reason to be in it. And I think that's what's happening with a lot of people in this stock right now, where, the parabola broke and who knows, maybe it'll find support at this 50-day moving average. But yeah, this is just, we're seeing some meltdowns in some of like the really frothy areas. And yeah, there's some more activity, but I don't want to hold you guys for too long. Thank you so much for tuning in. Really appreciate the support, and everybody that's watching these videos, please feel free to like this video and subscribe to the channel. and I will see you all tomorrow.